Hello, welcome to Accounting Hub. I'm Professor George Scarpin, PhD in Accounting, and our topic today is bank statement reconciliation. A very, very important topic when we are talking about cash, check accounts, and so on. So first of all, reading a bank statement, we have outstanding check and deposit in transit. These two are the most important topics. What is outstanding check? A check written by a company but not yet presented to the bank for payment. So I write a check, I record it on my accounting, however, it was not presented to the bank for payment at the end of the period that I am looking at my bank statement. It happens especially with the checks written on 30th, 31st, and so on. The other company, the other person, they will not present to the bank immediately. It can take days. So this outstanding check, I will reduce my ending balance on my accounting, but it will not be shown in my bank statement. On the other hand, deposit in transit, that is a little bit rare nowadays. But it is a deposit recorded on the books but not yet reflected on the bank statement. Especially in the past, the bank took some days to process the deposit. Nowadays, it is much faster. So maybe on 31st, we will have it. But other than that, quite rare. Hello guys, I'm back. As I always tell you, it looks like a live class, so I need to make a break. That's why you saw this weird message on our screen, but we are back. So as I told you, deposit in transit is a little bit rare nowadays, but it may happen if we have some deposit on the last day of the month, and it will show only on the first day of the month. So we can have this deposit in transit. So we will increase our records, but it will not be shown in our bank statement. So we have 5 steps in a bank reconciliation. Reconcile or resolve any difference between balance on the bank statement with balance shown in the accounting records. So 5 steps. The first one, prepare a list of the deposits in transit. Second, a list of the outstanding checks. Third and fourth, memoranda about debits and credits. And the last one, identify any errors. So, step 1, prepare a list of the deposits in transit. Trace deposit list on the bank statement to the books. Identify the deposit in transit. Any deposit recorded on the book but not yet shown on the bank statement. And we need to add them to the bank balance. Arrange the canceled check in numerical order. Trace each of them to the books. Any checks recorded on the book but not yet listed on the bank statement are outstanding. Subtract from the bank balance. Then we will be able to reconcile it. Credit memoranda, additions on bank statement for such items as interest paid or notes and notes collected. List all the items other than deposits shown as addition to on the bank statement. Interest paid by the bank if we are looking for a savings account. Amount collected by the bank for the customer. For these items, bank increase or credits its liability to the company on its own books. So that's why they show it as credits, even if they are assets for us, so debits. List all items other than deposits shown as additional, so interest, amounts collected. So for these items, bank increases its liability to the company on its own books. So credit memoranda here, and then all of these items. Debit memoranda, deductions on a bank statement for such as NSF, non-sufficient funds, checks, and various service charges. For instance, I got a check from a customer. When I presented, the bank told me we cannot process it because the client has no funds. So we got no money. List all amount other than canceled checks shown as subtraction on the bank statement. Non-sufficient funds, checks, service charges, and liabilities created on the books of the bank when the company deposit money and bank reduces the amount of its liability for these various items and debit the liability on its own books. So we credit them. For the bank, our account is a liability. They need to pay us. For us, it is an asset. We will receive this money. And step 5, identify any error. Identify any errors made by the bank or by the company in recording cash transactions. For instance, reconciliation. So balance on check stub, balance in our account, balance on bank statement. They are not matching. However, we have one outstanding deposit here. It is recorded in our accounting system here in our check stub, but it's not on bank yet. So we add them. Remember adding the outstanding deposit. And then the checks, the outstanding checks. If you remember, it is this one, the list, outstanding checks. That they are here. So these checks, so we will subtract them. 2,597, almost. However, there is a bank charge, service charge, maintenance fee, or whatever, $25. So we will subtract from our cash stub. So now the numbers are matching. So we have here the date, the check stub balance, service charge, adjusted check stub balance, then bank statement, outstanding deposits, outstanding subtotal, outstanding checks, and adjusted bank balance, and the numbers must match. Adjusted, compare adjusted balance, they must match. And guys, we need to record this service charge in our accounting because it is on bank statement, but it is not in our check stub. So recording a bank service on a check stub here, so we will move from $2,622, this one, to the $2,597 here. How do we record it in? So write the service charge, the amount, and the new subtotal in the subtotal line. How do we record it? It is an expense. Remember, it will increase our expenses. We will debit it. It is reducing our checking account, reducing our assets, so we credit it. So how do we journalize it? This 25, miscellaneous expense, usually it is a small number, and cash or checking account, depending if we are combining them or not. Usually we combine in only one account. Debit, miscellaneous expense, 25, credit, cash, usually on 31st. Because of the chronological order. Write the date column, title of account, debit, and the amount. The amount credit, the title of the amount credit, and the credit amount. And for the source document, for instance, the bank statement and so on. So we call it M3 here. Okay, guys, pay attention, especially on this last part here. Oh, here. It is the hardest topic on bank reconciliation. So you can watch this video how many times you want. And by the way, subscribe our channel. Very important to us. Like our Facebook page, Accounting Hub by Dr. Scarping. Okay, guys, thank you so much. Questions or comments, leave it here or email me at jscarping@gmail.com. Have a very nice day and God bless you.